Good morning, traders. Welcome to another session of Technical Talk. My name's Aaron Hill, and time is now 8:10 a.m. GMT. As you can see on the screen, Asia equity indexes closed mixed overnight. The Nikkei 225 ended down 0.4%. South Korea's Kospi ended flat, and Australia's ASX 200 closed 1% lower in the red. Now, as we head into the early minutes of European trading, as you can see, we are green across the board. The FTSE 100 is up 0.3%. The DAX 40 is up 0.2%, and France's CAC 40 is up 0.3%. The Euro Stoxx 50 is also up by 0.1%. This is also echoed in US equity index futures. As you can see, we are also green across the board here. Dow Jones futures is up 0.6%. The S&P 500 futures up 0.6%, as well as NASDAQ 100 futures also up 0.7%. Now, in terms of the crypto market, just a quick snapshot here, guys. We are lower, considerably lower across the board. We have had a low of nearly 40K in Bitcoin against the US dollar, and we are currently down to, more than 7% as of current trade. Ethereum against the US dollar is down 6%, down just over 6%. Litecoin against the dollar is also down 5.5%, and Ripple against the dollar is down just over 3.4%. Now, just as a quick overview of the majors this morning, we are also green, really green across the board in terms of majors right now. So the euro dollar is up 0.1%. The Aussie dollar and New Zealand dollar, risk-sensitive currency pairs, are the major outperformers currently. So the Aussie dollar is up 0.5%, and the New Zealand dollar is up 0.6%. Now, in terms of economic events or risk events today, we have already had the retail sales out of the UK. And as you can see, for the retail sales month on month, January's reading, we come in above consensus at 1.9%. And for the for the core retail sales, we also, again, a month over month reading, we also came in at 1.7%. Now, going forward, we do have US existing home sales due on the calendar at 3 p.m. GMT. And we also have some Fed speakers on the due to hit the wires at 4 p.m. So FOMC member Williams is due to speak at 4 p.m. Also, Brainard takes the stage. FOMC member Brainard takes the stage at 6:30 p.m. Now, where we are in terms of the major currency pairs right now. So this is the euro dollar. So just as a quick recap, on the weekly time frame, the resistance area at 1473, 1583 here continues to remain front and center. We did get a reaction the prior week, and that dropped nearly 1%. So as well this resistance area, together with a clear downside bias that's emphasized by the trend line support breach, as well as the break of the November 2nd lows of 2020 at 1602. Now, we are seeing, well, technically, I am seeing a conflict, a difference of opinion on the daily time frame here. As you can see, we have broken out of we have broken above a trend line resistance here, and we have recently bounced off of the barrier once retested. So this is now a trend line resistance turn support. Now, what this tells me is there is some bullish interest in this market, but until we take out the 14th of January high at 1483, I would not be convinced we are in an early reversal to the upside. But in the event we do take out 1483, the quasi-minor resistance at 1667, as well as the 200-day simple moving average, currently trading around 1646, are the primary objectives, upside objectives on the daily time frame. Now, in terms of the shorter time frames, we have the H4 here and that H1 at this point, the lower chart here. For the H4 time frame, we did bounce off of this prime support, which was a noted area to watch for in my previous market analysis. We bounced off of here at 1262, 1304 at the beginning of the week. Now, we could see further upsides take shape on this time frame in line with the daily time frame, targeting quasi-mother resistance at 1448. Now, with the H4 and daily time frame in mind, we could see H1 supply at 1407, 1386, give up ground and complete a harmonic bat pattern. Now, the harmonic bat pattern is composed of a defined 88.6% Fibonacci retracement ratio from point X to point A at 1470. We also have a 1.272% Fibonacci projection within this area. That's what Mr. Scott Carney labels as an alternate AB equals CD. And we also have a 200% BC projection. Now that's from B to C. BC projection, and this really offers a tight area of resistance to be aware of in the event we do break above this supply. So my technical view currently is we are likely to break above 114 eventually, and maybe make our way to this to complete this harmonic bat pattern, which I do expect some form of reaction to emerge. Okay, so moving over to the Aussie dollar. Look, we remain within prime support on the weekly time frame at 69.68, 672.42. As you can see, it's done very little to inspire much of a bullish showing since late 2021. Nevertheless, we are still within the prime support, and this area should not be overlooked. Now, in line with this, we also see the daily time frame on bound for a potential test of this quasi-mother resistance at 72.78. Now, do note the daily time frame has been south of its 200-day simple moving average since mid 2021. This is a bearish signal. As well as prices also being contained below these two trend line resistances. Now, in terms of trend, let me just reiterate where I left off in my daily market analysis. We are currently lower, longer term, and we have been lower since August 2011. So, with that being said, I think it's let me just see how much of a correction we had from this point here. So near the 12.5% correction, the 12.5% correction from mid-Feb tops of 2021 to the 2021 rally, which began at pandemic lows of March 2020, may not be a dip buying scenario. It may in fact be a continuation, a possible move that may continue to the downside and eventually greet support on the weekly time frame at 66.73. This is due to where we are coming on the longer term time frames. This is clearer on the monthly time frame, by the way. So with that being in mind, in mind, we have the weekly and daily covered. So we are looking at the 72.78 quasi-mother resistance to potentially hold. There's quite a lot of confluence around this area, technical confluence, as you can see, the quasi-mother resistance, the 200-day simple moving average. Now, simple moving averages do often offer some form of dynamic support and resistance. So do be aware of that if we do test that value, as well as the trend line resistance here. We do have an area of reasonably attractive confluence. And moving over to the shorter term time frames, we do have the H4 harmonic bat pattern that reacted last Thursday, I believe. look, it came within pips of reaching the 61.8% Fibonacci ratio at 70.74. Now, for anyone that follows harmonics, they will note that a common profit objectives derived from harmonic patterns is simply take the A to D distance and then extend the 38.2% and 61.8%. As you can see, let me just highlight this for you. As you can see, we did reach the 38.2% easily, and we crunched through that. I was expecting us to test the 61.8% before rallying higher, but we haven't seen that. So yes, it looks like we are going to retest this harmonic bat pattern. We could break above this, given we could break above this. As you can see, the daily Quasimodo resistance is just above that area, so we could snap above there to test that daily Quasimodo resistance. Now, in terms of the H1 time frame, we had a lovely test of this prime support at 71.41, 71.52. This was a highlighted area in my market analysis to watch in the event we do drive lower from the 72. But look at the confusion around this round number. You can see price broke above this number, effectively forming a bull trap. So what this does is this traps breakout buyers, as well as traps those attempting to fade the round number at this point here and have they have their stops just above that number. And these are all buy orders. So once this level is breached, all those buy orders are in play, and then price slams lower. And it really did come aggressively push lower and stopped just at that prime support at 71.41, 71.52. Anyway, so we are now back above the 72 level. And to be honest, we don't really see much until the 10th of Feb highs at 72, 50-ish, followed closely by the Quasimodo resistance at 72.57. So these are the upside objectives for me. Which is very close to, as you can see, the daily Quasimodo resistance. So, really, I am looking at further upside on the Aussie dollar for the time being. Now, clicking over to the dollar yen. I'm going to leave the higher time frame picture out of this because the H4 time frame has just been incredible lately in terms of harmonics, especially. So we had an AB equals CD formation to the upside, as you can see, denoted by the black arrows, which terminated at the pip of daily Quasimodo resistance at 116.33. As you can see, we did get a nice reaction from this area. And if you remember, the common profit objectives for harmonics is to take the A to the D leg and then extend the Fibonacci retracement ratios, which I did from this point. And as you can see, we have reached the 38.2% from this move down. I'm going to remove that now just to make it clearer. And now we have the 61.8% in view. What's also important is we broke this trend line support, which is now a resistance and was recently tested in recent hours. So if we hold here, it's a very good chance we are going to complete this AB equals CD formation to the downside. So this is a bullish formation, which conveniently aligns with the 61.8% Fibonacci retracement ratio of this larger AB equals CD configuration. So do be aware of this level around the 114.57-ish region. Now, in terms of the H1 time frame, now this is with bearing the H4 time frame structure in mind. We did crack below the 115 figure yesterday. Now, I do expect price to eventually try to overcome this psychological figure again and maybe make its way to the support level at 114.42. Now, what this does is what's interesting here is this support level is located, as you can see, just below this, just below the H4 AB equals CD termination point. So between 114 and 114.42 and 114.57 is a reasonably technically confluent downside objective to be aware of, which we could see a bullish reaction form from. Okay, finally, not so finally, we have the Dixie next. So onto the pound dollar. There's not really much going on here, to be honest. Technically, we have broken above this daily resistance at 36.02 yesterday, excuse me. Only marginally broke above this area, which has potentially cleared the pathway for another test of this 200-day simple moving average, currently trading at 36.86. Now, if we do get a test of this area, much like the reaction seen here, I do expect some form of reaction to be seen, though this resistance at 136.02 could indeed form support. So we have to be prepared for that. On the H4 time frame, we have been consolidating since around the beginning of Feb, and we have been consolidating between a resistance area at 36.22, 36.46, and a Quasimodo resistance turn support at 34.98. Not much really going on the H1 time frame. The only point I would make is we did reject this H1 Quasimodo resistance. Let me just highlight the value at 36.37, and I did note, I think price was reacting around this point here. I did note in the market analysis, if we see 136 offer this currency pair support, this could be an early cue that we are going to hold above this daily resistance at 136.02, and as you can see, we have pushed higher. Now, as for targets, I am looking at the H4 Quasimodo resistance. This is at 36.50, as you can see here, 36.50. And following this, we'll then be looking at the 200-day simple moving average. As I said, trades at 36.86. Now, finally, on to the US dollar index. This is with the ticker symbol, I believe, USDX. So look, with the US dollar, excuse me, with the US dollar index, we are in the early stages of a potential D-leg to the downside from an AB equals CD formation, denoted by the black arrows again. But if this should play out, this implies we could see a whipsaw below this support area. I highlighted in the previous weekly report, I believe, and this is a support area that's composed of as you can see, a trend line support taken from the lows of around 89.55. Along with support at 94.65 and a collection of Fibonacci ratios. Do be aware that 50% is not a Fibonacci ratio. We have the 61.8% at 94.87 and the 38.2% at 94.44. So this is an area I am watching to the downside on the dollar should sellers continue to strengthen their grip. Okay, with that in mind, thanks so much for joining. Have a wonderful weekend, and I'll catch you bright and early on Monday morning. Thank you.